So you can see, despite the 10 days lockout, we have had a good growth in volumes, about 8% in total, including 5% from own production. And prices between last year and this year also have shown an upward trend by nearly about 10%. So both these have led to about 18% growth in the top line. And we have managed to retain the variable cost at the efficiencies that we normally run, and been able to reduce the prices in some select items even further. That has led to about almost a 48 to 50% jump in EBITDA, and we also brought down the finance cost, but because we are repaying our loans or even prepaying our loans through the cash generations that we have been having. So with that, we have been able to up our PAT by almost 93% over same period last year, same quarter last year.
So what will be your revenue guidance for the next coming quarters?
Revenue guidance as such, we don't provide any futuristic numbers. So all that I can say is we continue to hope and plan that we will grow at the same pace at which we have grown the last 2 years. 2 quarters. And the market is also ripe, market is growing, and the prices are buoyant, and nobody has come up with any fresh capacity since we came in last. And hopefully till further capacities come up, there will be some buoyancy in the market. The market continues to grow at around 5 to 6% in overall terms, within which some select segments are growing even faster. And the very highly buoyant pulp prices, and with it all the other prices overseas, is also helping us in a big way.
So what will be your guidance for the volume growth? Since you're already having an 8% growth this quarter, so what can we look at for the coming quarters?
Yeah. See, we are already operating at around 105%. So whatever volume growth will come by optimization of products, or enhancing the GSM or the weight of the paper that we manufacture. But that will be limited to maybe about 4 to 5% per annum kind of growth rates. Plus, we are also in outsourcing, as you know, and we are also trying to build up volumes there. And if we build up that volumes, that can also give us some volume growth. Our focus has been on efficiency till then, and of course we have announced a big capacity expansion in our unit CPM. Of course that will take effect only 24 to 30 months from now, and big jumps will come only there, but till that time we have to make do with this 4 to 5% kind of growth rates from own production, and whatever we are able to source from outside, from outsourcing, that will be the volume growth.
So how has the pricing been over the last few months, and what you are looking at? The prices have been influenced by two factors. One is that supply has caught up very smartly in the last about 2-3 years, because there's no additional supplies which have come, but the demand has been growing by 5-6% meanwhile. And overseas also, because of very high pulp prices, the product prices also have been very much on the high. So we have been able to get much better prices in the domestic market also, because the volume of imports that was coming in from Indonesia, etc., have significantly come down. And of course, the proposed minimum prices at which uncoated paper can be imported into India, that will also augurs well for us for the future. How is the price of lumber prices trending, and what can be the impact on the margins?
The prices have been buoyant, and it will continue to be buoyant as we go forward. Since we are already operating at high capacities, the margins will have a much better traction than the prices.
Okay, and what are the current debt levels which we are seeing actually?
We have about 1,200 of gross debt, which includes working capital and the long-term loans, but we also have about 400 crores worth of cash in our
balance sheet accumulated from profitable operations during the last 2 years. So we are on very good debt to EBITDA levels and debt to equity levels, and we plan to repay further debts as we go along and become very strong on those parameters.
And the final question, sir, what is the final outlook, for the financial year 2019?
As I said, I think we should be repeating this quarter maybe in the next 1 or 2 quarters, unless there are some setbacks either internally or externally. But that's our hope and prayer and plan, and we will continue to strive for better efficiencies, better closer distances to procurement as far as raw materials are concerned. We will carry on our research activities and propagation activities for plantation, which will have a long-term impact on us. Of course, we will repay as much of loans as possible, so that we become a lot less light, or rather a lot lighter on our debt, and so that can give the ideal platform for our future expansions.
All right, let's leave it till there. Thank you for talking to Bloomberg Quint.